Hello, everyone. I hope that everyone had a good weekend. Hello, AJ. David Hess, how are you? Mary, how's it going with you? Everyone ready to have a good week? Michael Bergman, hello. And
Good morning, Dale.
Kman, how are you doing today?
Very well. How are you after your long birthday weekend?
Oh, it was a great weekend. I got to see my sister and my niece and nephew. It was great.
Oh, fantastic.
Family's the best, And
Absolutely.
I don't get to see them that often, so it was great. And we had the best Italian beef sandwiches. It's a restaurant that's a chain that started out of Chicago. And Chicago, I grew up on that food, Vienna hot dogs and Italian beefs. So it was like, my taste buds went into a time machine. So it was great. So, I kind of noticed yesterday with the yen here that it was, trying to tell us that there was, something happening here, euro pulling back, but the daily, it started to come out of this little, triangle. You could draw a downtrend line here. You think there's a shot for new highs here?
I don't know new highs. As I was mentioning before, I think we're going towards the mid-range there, and I did make a note of this mid 128s in dollar yen, which will be interesting level in my opinion. But really, the yen has been glued to the yields. Yields everywhere are spiking, and so dollar yen is higher. Yen crosses are higher. And also with energy going back up, the yen is suffering once more. But I don't know, does it have a lot of room to go past the mid 128 mark? It all remains to be seen. We are still in end of month, and I would like to reserve my real answer to what's going to happen to the yen come tomorrow. So.
Okay, and maybe people, it's kind of early to be evening up in front of the Fed, right? It's still like a week and a half away.
Yep, that as well, 2 weeks away.
Yeah, and you look at the 10-year, doesn't seem to have the same type of energy. Same looking chart, but the yen seems to have more energy, stronger candles. You see the difference? Yeah.
But the difference is energy, I think.
Okay.
You know what I mean? The oil has been shooting higher, and this EU Russian ban deal that they managed to have in some form last night. So all the yields are shooting higher together with the EU inflation numbers absolutely skyrocketing. So
I also heard Luke Oil, which is a Russian oil company, they're considering cutting production. So that's in the market too. I saw an article, Nasil Haji showed an article where there was an interview with the guy from Luke Oil. So they can actually afford it at this price. I don't know what the strategy is. It's almost like they're worried about what might happen to prices when the war ends. Although it doesn't look,
I don't really think they can sell it today's prices because their main takers are China and a few others, and they're offering huge discounts of what I understand. So, but yeah, I mean they will always find some takers. Yeah, I don't know. I have no idea about the Russian oil production. Yeah, China is of course a big taker, and their suite of followers. Will that save them? Maybe in a way.
Okay, and Euro finally will pull back after what, a 300 and 430 pip rally or so. So I've drawn some fibs here. I'm going to try correction. I know some people are saying this is it and we're going to new lows. Maybe this is just we'll just get some type of correction maybe ABC, and then we have another wave like this.
And as well, it's a bit there's some logic to today's, at least in the European morning euro sell-off based on end of month flows. So we really need to get
wait till tomorrow.
Get past those end of month flows and then see where we wake up. Really, I mean, in the meantime, it can give like great levels for shorter term traders. If this is pure end of month and the euro gets dumped on the end of month into another maybe 10 or 15 minutes when the old ECB fixing will be done, it might be a great opportunity to try an intraday long, but the levels waiting upstairs are pretty big, in my opinion, as well, around the 107, anywhere from 107.80 to 108.30, 35. It's a big zone, in my opinion.
I'm going to be interested. You know, the Aussie's only down 19, so that's kind of a market tell if you want to fade dollar strength. I think that's one, and just a little bigger view on the dollar. I'm going to be interested to see what it does at 230. You know, if it negates this breakdown or not. That was this low, so only about 40 points away from that.
Yeah,
looks like it's going to go above it. You know, I'm thinking maybe 103.5, but you know,
I'd say if we get any evidence that this is done on those hourly or fixings into the 4 p.m. London time, which is in about 3 hours. If there is evidence that this move is really linked to that, and then we see a hold, that could give you a pretty decent entry point if you want for those who would like to be short dollars.
Okay.
On the back of this resistance.
I heard some news this morning, and since I've showed you know, some of the gold miners that I was interested in, I read today that where is it? Yes, Kman Gold was bought out today by GFI. I don't know the details. I think it's all stock, but you know, I think that's just the beginning. I think the big ones are going to gobble up the little ones because it's harder to get more production out of their mines than just to absorb someone else's production, and it's not going to be the kind of takeovers that it was in previous years when the miners were under pressure and not making money when things were at their production costs, and it was just a way to take over distressed companies. Yamana was not distressed in any way, so you know, it could be the beginning of some takeover stuff happening in the mining section sector. So I just wanted to bring that up. What did you guys talk about today on the Flow Show?
Oh, we talked about the weather, really.
By the way, you got some real nice views yesterday on the video. So, you know, people that didn't want to get up, you know, they can watch a video later to catch what you said. So that's pretty good for a few weeks out there.
Yeah, we do get good feedback, to be honest. So it makes us very happy, and we thank everybody for their support.
So silver, the big question is this going to be a break to buy with a higher low, or are we going to wash out again?
It's struggling. I even tried to buy it yesterday through the 22 figure 12-ish resistance that I had, and it just lasted a few hours, and we went back in the 22 straight away. So I stepped out of it. It's a bit of a struggle. I think the market is not 100% convinced about the Chinese reopenings, about the May data that we are seeing overall, which are slowing down compared to the last April-March data. And silver needs a good economic foundation and background to really start to ramp higher.
Kman, hey, morning, everybody.
Go ahead, Stel.
Funny you should
mention. Wait. Of course, you guys start talking about precious metals. Stel has zero to say all the whole last 10 minutes, and now we talk about precious metals, and Stelios has something to say.
He didn't want to interrupt.
Of course. I just want to say one thing.
His manners.
It's funny you should mention China. I read there was an article saying that China are going to double their investment on solar energy next year.
Okay, that needs a lot of silver.
Well, theoretically, yes, but in practice, nobody wants it. It's useless. Just chuck it away and forget about it.
Well, I know that you were waiting for this break, so we're not going to talk about numbers for entry, but you and I and all the subscribers know where Horvat's what he's looking for. It might be worth a shot, but you have to be a subscriber to see his count. I'm not going to give it away. I'm mean today.
You're
generous
today. And good morning, by the way, guys. I hope everybody's doing well.
Scrooge, huh?
I know you do sound like Christmas Scrooge.
No one can get it unless they subscribe.
So, hey, Stel, how you doing? How was your weekend, Kman?
Very good, thank you. Very good.
Good.
Yeah, it was a long weekend here, and Dale, I heard you talking about Chicago restaurant, and ironically, we had to get some food, and we stopped at Portillo's, which, if you're a Chicago guy, you might
know. That's where I was.
Oh, you went to Portillo's. Yeah, that's great.
That's about 20 minutes.
We happened to just run through a drive-through there. We are just kind of panicked, trying to find something. Yeah. We love that place. We have one that's a block away, so it's great.
Wow, God, I'd be 300 pounds.
Yeah, we would be too if we went there all the time.
What's
but
your
we'd love to go there
there
all the time. Just doesn't make any sense. Anyway, I'm going to let you guys continue to talk a little bit. I just want to say good morning.
You probably still have a half a Italian beef sandwich on your desk. Anyway, so
no, but I did not finish my onion rings.
All right.
Yeah.
So, this is going to be important for the metals, don't you think? Stel, I thought we kind of had a bear flag here and we were going to break down, but look at this. I mean, are we going to new highs?
Yeah, looks like we're going to test 88 again.
88 was only 38%. Why can't it go 50%?
It can do anything it wants.
Yeah, that's what I mean. So,
yeah,
maybe it will be a failing rally. Or
bottom line is, I'm still not convinced about metals either way. I try to resist temptation when they have a few good days. It's not clear yet, and as risk is getting sold today because suddenly the market remembered that inflation is still going higher, and 8.2% year on year in the Eurozone is 4 times more than their target. And yields are going higher, mortgage rates are going higher, disposable income is going lower. Yeah, this is not a very good scenario. All the while, crude is going higher, energy prices are going higher. So stagflation, I don't like saying the word, but it's the first time I think we are getting close to that in many, many years. And this will be pretty bad. The question is, what do central banks do to fight it? And there was a person I really, really like and admire on Twitter who wrote, oil is going up for various reasons, not because of demand, huge demand, because everything is going well. Why are you hiking rates? You should be cutting rates. I'm not on board with that, but I don't think hiking rates actually solves anything. So it's a very difficult situation for the central banks, and I think the Fed in particular are going to U-turn sooner than people think. My humble opinion, but still, we talked about the S&P on
I think
Friday.
They'll try QT at least for a couple months.
Yeah, they might do, but they have to, because they've told us they're going to do it. I think it's going to be a major surprise if they don't. But I don't know what the effects are going to be. But we talked about the S&P on Friday, and I said, before I said, look, the bear market rallies happen, and they're quite vicious and quite sharp. And I said at the time, I think 4150, maybe 4200 would be a very nice place to sell as a nice risk reward trade. And we touched 4200. And we're now back down to 4130. So that was nice for whoever got it. I think Kman managed to sell 41.90s or something like that. That was really great. But overall, I'm going to sound like a broken clock. My macro views are not changed. Obviously, markets will move one way and the other. They're not going to go in a straight line. But I think rallies should be sold in risk assets, and that's and yields should be bought. So bond rallies should be sold as long as the central banks tell us that they're going to continue doing what they're doing. And we had one of the ECB members today. What was the name? Just a few minutes ago, actually, saying that Casimir, saying that the neutral rate is closer to 2% than 1%. That's where. And maybe, expects 25 basis point rate hike in July, but open to discussing 50s in September, maybe further out, given record inflation. Now, my question is, why wait? If you're going to be doing 50s, why wait? You have 8.2%. What more do you need?
That's the question everybody's asking the Fed, right? I mean, it's the same question. Everybody's like, why'd you even pull a 3/4 basis point hike off the table, So I mean, and like I said, good morning, guys. But you bring up a really great conversation, debate topic. I mean, you look at these central banks and you're like, why don't you just, if you're behind the curve, why don't you just bring up, like, why didn't the Fed actually just raise rates 3/4 of a basis point, or maybe even a full basis point, and said, look, we're just going to ratchet it up to here and then see where we go. I mean, I don't, if you're admittedly behind the curve, then why don't you do that?
Because they're doves in hawks' clothing.
They try to engineer a soft landing, but that's
of course
the way things have gone. The way things have gone, it's almost impossible. It's impossible to do it. So you might as well. You're either fighting inflation or you're not. You're either going to say, right, we're going to bring inflation down while we put the brakes on the economy in a big way. You have to accept that and acknowledge it. Otherwise,
let me ask you this, and this is obviously very hypothetical. Like, what would be if you're the Federal Reserve and you knew, and this is like not your normal common practice, but you're like, we raise the rates 1 full basis point and we're stopping, and we're going to see how the economy, accepts this move in rates. Isn't that almost better than like just ripping the damn Band-Aid off than sitting there and going, well, we're going to do 50 and then we're going to do another half a basis points here, 50 basis or 50, was it half a basis point?
Half a percentage point.
Half a percent, excuse me. I'm sorry. I keep I keep saying it incorrectly. A 0.5%, hike here, and then we might do another half here, there, and then if everything goes well, it's like, dude, you're just like you're torturing the market. Just rip the damn thing off.
Yeah, that's a good point. As long as you don't surprise the market in a huge way, as long as you kind of pre-announce it so the market can digest it, I think that's probably the way to go. That should have been the way to go. If inflation has run away, you have to step on the gas. But these guys are academics.
It's neither here nor there now, because what we've got is we've got facing a 0.5% hike probably in 2 weeks' time, and then another one in July, and we'll have to see what the Fed wants to do from there. But I wanted to show you guys, pretty big rejection in the euro this week. Yesterday over the holiday, we hit the 108 level. You can see how the euro just kind of rejected there. We are pulling back, and I think that pullback, is very much in line with the pullback that we're seeing in the S&P. But I do think the S&P is going to be finding some pretty key support at that 4,100 level. I mean, the 4,100 level was the big, I'll call it the line in the sand in the market. We really held that level pretty well. Do you guys think that the S&P is going to be able to grab a foothold here? What are your thoughts? Kman, do you have any thoughts there?
Yeah, as I say, well, for me, 42 was a pretty decent level. It's a bit of a trend line there as well, if I'm not mistaken. It capped, and now on this dip today, I bought it back because I have support between, what is it, 41 and 41 and a quarter, something like that. And I don't know if there's more rebalancing to do right on the last day of the month, because that's part of this rally is huge rebalancing needs where people needed to buy equities, apparently the portfolio managers. So that's part of it. I don't know whether they still have a last leg to do. I'll try to sell it again if we see 42, but I won't get married to the position. I kind of agree with Stelios that we should be somewhere selling rallies, but as usual, define a rally, right? But I think 42 is already a nice level. And if it breaks, then we're probably looking at 100 points higher, yeah, around 40.
I think we're going higher. You know why? There's too many bears out there. There still is just everybody is stagflation. No offense, Stelios. I know you said it today, but it does look like the likely path, by the way. But the parading around, the bearishness, the over bearishness right now, I'm not buying it. Meaning that I agree with everything that everybody is saying. I don't actually disagree with the market over time heading lower. I think really just near-term sentiment is so bearish that I think we're going to continue to squeeze. I know I said that last week, but
you were right last week.
Yeah, and I still think that continues. I still think that the market is way too bearish down here. But I do feel that we are topping. So what's that, Kman?
Twitter, right?
What?
It's bearish on Twitter.
Yeah, FinTwit is financial Twitter, or FinTwit, better known as, is very bearish as well. But it's not just that. It's just it's everywhere, everything, and I think it's a little overdone. But let's really quick. Let me ask. We have Canadian GDP coming out. Notice how the dollar CAD finally broke. It was channel range bound forever, and it hasn't been a currency that I've really focused on a lot, but notice how we just dropped to the 200-day moving average. We're literally hovering at the 200-day moving average in the loonie. Do you guys have any opinion here? That would be a no. That would be a negative. There is no opinion. Oh, speaking of negative, I always think whenever I say negative, I think negative Ghost Rider. This pattern is full.
Oh yeah,
I did see Top Gun over the weekend, and just for all of you that have not, it's freaking epic. Go see it, and go do yourself a favor and go sit in a theater and watch it. It is really, really good. You will not be disappointed. And if you're any Top Gun type of fan, it plays a lot of fan service and it's a lot of fun. Okay, that is my movie review of the day. So dollar CAD, we've got the 120.
You're a Top Gun, Blake.
Oh market. Man, I tell you what, Dale, it's a throwback to days that we all
the
had
Iceman.
I just look back and I'm like, yeah, I don't look that good with a t-shirt with a shirt off anymore.
Oh,
but back in the 80s, I would have, I look great.
Yeah.
Anyway, hey, look, we've got some fib levels coming into play, in the dollar CAD around we're at the 618 retracement right now, maybe a further dip down to 126.90 on any, Canadian data. And I would say that if we get back above 127.13, I would not want to be short if this thing squeezed back above that red line right there. If we get right back above that support, I would not want to be on the short side. Just remember, we do have Canadian GDP coming out. And I know, Kman, you mentioned, and we're going to come back to this live. You mentioned about the yen. I was looking at the yen. Most people know this in our community. I actually had an order, and I still have it actually, it's sitting out here. I've had an order to buy the dollar yen at 126 for, I don't know, 4 weeks, maybe. It's just been sitting there, and I'm just patiently been waiting for it to trigger my long. That's the breakout point from May of 2015. You can see we got pretty damn close. I mean, we got within what 30 or 40 pips, somewhere around there. And I never pulled the trigger. I just had my order just sitting there, and now I almost feel, frustrated that I might have missed it. What are your thoughts on the yen here, Kman?
I'm just going to repeat what I said.
Yeah, please do.
In current environment, the yen cannot really strengthen much because we got yields rising across the globe, apart from in Japan, because Bank of Japan is still having their yield curve control, and you got energy prices rising. So that's like two of the major facts against any yen rally. So for the time being, I think it's going to be difficult to bring, whether it be dollar yen or yen crosses, because if you look at the yen crosses like Aussie yen, sterling yen, Canada yen, they've all been like absolutely rising very fast again. So this, for the time being, I don't see this come off really a lot, but there is this uncertainty that Kuroda threw in the mix end of last week or just after Davos, saying that they might be starting to look to possible exit of some extraordinary measures. So are we going to ramp past this mid-range 128.5, 129? I'm not 100% sure either. There's going to be a few breaks on there. So I would say trade the range. I still think from the yen short side, if you can find the yen rally for now, but then be careful into the BOJ in a good 2 weeks' time.
Got it. All right. Well, thank you very much. Galaxy S8 asked the Biden Powell meeting today. Can somebody say something about it? Yeah. Yes. Powell was fired earlier. You missed it? Did you guys not catch that?
Didn't see that headline.
No, just kidding.
Might be.
No, it already happened though. I'm pretty sure that the meeting already happened. He said that Powell is still independent. The Fed is still independent.
Oh,
I think
yeah.
Biden confirmed that.
Of course it is. He
will ask about their plan to fight inflation, because Biden has been on about inflation.
Of course, because it's politically, it's right that he has to ask about it, right? Because, everybody's yammering on about it. So, of course, everybody's talking about inflation. So, but yeah, there isn't anything that really is definitive that came out of the Fed meeting or the Biden Powell meeting that I know of. So it's not like they talked about, anything that's going to be groundbreaking. What's that?
Not that they would talk about policy.
No, I pulled a Biden. I completely forgot about it anyway, so it's over. But that's gotta hurt. So let's. We got a couple of minutes to the event here, or the GDP numbers. Have you guys been paying attention to anything else, Kman? Is there anything that really caught your eye overnight during the flow show?
Well, just about this EU thing, really, about Russian oil, and then.
Yeah, how about, well, what's that doing to crude? I mean, look at crude. I mean, I saw, crude is just out of control. I mean, gas prices are just out of control here in the US. And I say that because I know if they're out of control here, they're really out of control in Europe. But I mean, we just continue to grind higher in crude. We broke above the 618 retracement. So what do you think the effect is going to be with energy in Europe now?
We're going to have to pay higher prices, and it's not going to bring inflation down anytime soon. And it might mean some more erosion of people's wallets. I don't know whether it's a really great thing for the euro right now, but on the other hand, it could push ECB to hike faster, and then you have the other side of the medal for the euro. I still think we're in a range in the euro until it breaks above 108.30, 35.
Yeah, well, I wouldn't want to be short the euro, but well, let me put it this way. But I think the rejection was pretty big here. I'd rather be on the long side of the euro on dips down to 106. That's kind of the way I'm viewing it right now. We do have Canadian GDP coming out here very shortly. Let's pull up the data flash. This comes with your ForexAnalytix, by the way.
It's Q1, so if it's not too far away from reality or expectations, I wouldn't say it's going to impact Canada that much.
Yeah, I don't think so either. But you know how it is, Kman. You know, you keep an eye on this data because if it's ever outsized one direction or the other, you know, we could see some decent moves. So that's why we're paying attention to it. Stel, do you have anything do you want to say before you know we pass it all over to Dale?
Not really, no. Let's see.
Did you want to talk about precious metals again? Oh, Canadian GDP. Better.
What is it?
Expected 0.7%.
Oh, there we go.
Yeah, this remember this date, the data flash comes out about as fast as Bloomberg, if not quicker. So if you have Bloomberg, like I used Bloomberg for several years, I only used really the data release information. That's not true, but that's one of the main things that I used to do. Yeah, you'll get it here at Data Flash just with your ForexAnalytix, platform subscription. So, anyway, not a big mover here in the dollar CAD, as you were saying, Kman. So we'll see if we can break back above 127.20, or maybe even challenge moves down to like the 126 and change level. The Canadian to me has been one of those that unless you were pre-positioned luckily in the market, it's really hard to identify which direction it's going to move. I mean, it has been more of like you're lucky if you happen to be on the right side of it. It moves and then stops, and I haven't been able to put my finger on it because it's definitely not moving with crude, and it's having a hard time moving with, or it hadn't been moving with crude, and it's really not moving on risk aversion. So I think it's been more of a challenging pair to put your finger on. Anyway, I want to say thanks everybody for attending today. Dale, I know you have an interview coming up. Is that correct?
Yes, sir.
All right. Well, I hope everybody had a great long holiday weekend. And for those of you that are not part of ForexAnalytix, I'm going to ask you why not. It's only $1 for 10 days, and download the mobile app when you're trying out ForexAnalytix. We just got a brand new mobile app on the Apple iTunes and Google Play Store. It's actually pretty slick, much better, more efficient now. It seems like it runs really quick, and I'm enjoying the new app. So check it out. And Dale, it's all yours.
Thanks, on your phone.
Thanks, Del.
Yeah, put the whole team on your phone, guys.
Yeah,
you could go anywhere. You'll get push alerts on your phone in case you need to do something.
Yeah, it's pretty cool. You keep talking about Greg, and you want to find out his count. His count is, in ForexAnalytix, and you can.
You're a generous guy. Oh, that wasn't silver. Anyway.
All right.
Thanks, Blake.
Thanks,
Kman, Stel, Dream Team. You have a great day, guys. Best team on the net. Don't you agree with me, Stephen? Welcome back.
Hey, how are you doing, Dale? Good to talk to you.
Good to talk to you, Stephen. So hope things have been going okay. I saw your tweet that you want to address Netflix today.
Yeah, well, I just thought that this would be of interest to your audience. And last time I was on, you said, why don't you have any slides? So
okay, beautiful.
I did a conference. Let me share my screen if I can do
okay. Yeah, so you have like a PowerPoint presentation today.
Yeah.
I'm going to give you a gold star.
Can you see that?
Got it.
Picture?
Yeah. Wow.
Cool. It's actually more traditional weather today in London. It's pouring with rain. But that is the Shard, and just south of the river. And how long have we got, Dale?
Half an hour.
All right. Okay. Well, let me run through this quickly. And talking about Netflix, just tell you a little bit about what I do, because just to inform your readers, I've got a podcast. We've had some great investors on that. And I've got a YouTube channel, so lots of free stuff. And I've launched, since we last spoke, Dale, I've launched a newsletter on Substack. So you can find that on my website. And we've been writing about quite a lot of different things, a few stock ideas, a few macro ideas. And, my main business is selling online courses. I don't think they'll be of so much interest to your audience, but it's more about investing than trading. But, we've got stuff like how you read a balance sheet, And of course, my book, The Smart Money Method. If you want to get hold of me, that's where I am. I'm on Twitter at Steve Clapham. The website's behindthebalancesheet.com. But let's just talk about Netflix. And before I get there, I've just got to do the usual disclaimer. This is not investment advice, just my opinion. Please do your own work. But the thing is, for the last 3 years, I've been very critical of Netflix accounting. And I said, look, I don't understand why they're being so aggressive, because frankly, nobody investing in Netflix really cared how much money they were making today. But in spite of that, they have this very aggressive accounting policy, which I'm going to come back to and explain. But I published 3 blogs on this. I published on Substack. It was my first piece on Substack. It was saying, you know, Netflix looks very suspect. And I've been critical of stock price. I was a bit early. I always am too early. But what I want to tell you is that I don't think it's cheap, even though it's collapsed. So this is Netflix. If you got in early on, you made yourself a fortune. And even if you got in quite late, you still would have done very well if you'd managed to get out. And this is often the case with these growth stories, that you do really well to the top, but if you get in too late, you get killed. And of course, that's exactly what has happened with Netflix. Now, this chart is actually the one I did to the end of March when I did my blog. And obviously, we've had a step down to below 180, and then we're tracing back up towards 200 now. As we've seen just in the last week, as people have started to go bottom fishing in some of these tech stocks that are out of favor. And what I want to do, I just want to explain why I think that this is a rally in a bear market for growth and tech, and not a change of direction. But you can see that if you got in at 700, you've been killed, right? And you've been killed much, much more quickly than the admittedly very steep rise up. And you made a lot of money in Netflix in 5 years, 6 years.
Down is faster.
But down is always faster. And what I believe is that usually there's 3 legs down. Now, you could argue that there's been a few bounces in here, so it's had a bounce there, it's had a bounce here, there's another big bounce here. But my belief is that we'll see another leg down. And the pushback on this is, well, look, let's look at the last time it was about $200, which was around the start of 2018. And in 2018, it only had 117 million subscribers, about half the subscribers it's got today. And you think, well, that must be a good bet. But, when it forecasts that subscriber numbers would fall by just 1%, the shares fell by 40%. And this is if you try to explain this to somebody that's not involved in markets, they look at you like you're mad, because a 1% move in the subscriber numbers, it doesn't even move a needle. You wouldn't even notice it on a chart. So why have the shares fallen so much? I think there's a number of reasons. This is the chart of it on the way down. This is to the end of April. This is the market cap. And this, I think, is a more telling chart. And I always like to run the market cap charts, because I think often, Dale, people look at the share price, right? And they say, oh, well, I can see the tops and bottoms. But if you look at it in market cap terms, you're looking at it as if it's a business. And you're looking at it saying, well, hang on a second. How many businesses in the world are worth $300 billion? It's a pretty small club. And none of the others had a turnover anywhere near as low as Netflix. And even at $100 billion, the $100 billion club, there are not that many $100 billion companies. And you have to ask yourself, if you've got a $100 billion company, you'd have to be pretty confident that it'd be around in 10, 20, 30, 40, 50 years. You can't be that confident with Netflix. I haven't done the work on how many $100 billion companies there are, but I would wager that many of them have been around for decades, not just since 2001, 2002. But the key thing here is the valuation. And I want to talk about 3 valuation measures. And I know that people in your program don't often talk about valuation, but I think in this case, it's extremely important to look at this. So let's start with the forward PE. Now you can see in the case of Netflix, I've had to cut off the chart. I had to cut it off at 0 because there was a time when it made a loss, and I had to cut it off at 200. I mean, I cut it off at 100, which, 100 PE seems pretty ludicrous, but you missed vast swathes. So I cut it off at 200. And you can see that, people haven't been bothered about what Netflix was making today. And they're now looking at this rather enticing sort of near market multiple and saying, well, hang on a second, surely it's cheap. And then they look at the EV/EBITDA and they say, well, hang on a second, here's a stock that was on over 100 times EV/EBITDA and is traded at, 50 times and above for vast periods of its life. And it's down below 20 historically. And on the forward EV/EBITDAs I've got in this chart, way below 20. Surely that's cheap. Now, in theory, that would be cheap. But there's a problem with Netflix. And that problem is that Netflix is a very weird way of accounting for its content. Now, if you look at Disney, when Disney makes a movie, a TV series, or any content, it charges the cost of that content to the profit and loss account as it's incurred. So it spends $10 million producing a TV program. $10 million goes to the P&L. Netflix does it very differently. And it does it very differently from most other content producers. When Netflix produces a $10 million program, what it does is it creates a $10 million asset. And then it estimates the viewing hours over the life of that program. So let's just make the numbers simple. Let's call it a $10 million program. And let's say that they assume that it's going to have 1 million hours of viewing. So every hour of viewing would cost $10. So in the first year, if there's 5 million hours of viewing, it would charge 5 times $10. And in the next year, if there's 1, it would charge 1 times $10. So imagine any new big release. Do you have Netflix, Dale?
Yes.
So when do you watch something? You watch it when it comes out, don't you?
Yeah.
So
when it's new, you mean a new
episode
or new
so
movie?
The viewing always takes place when the thing's released because everybody wants to see Squid Games. This is a new exciting thing. So you have a very front-end loaded amortization. But the problem with this is it's amortization. The cost of the content is amortized to the P&L. And when you look at the EV/EBITDA, it's the enterprise value to earnings before interest, tax, depreciation, and amortization. So you cannot use this measure to look at Netflix because its single largest cost is content. And if you're looking at the EV/EBITDA number, you're looking at the cost excluding its single most important cost. You're looking at value.
Disney lists that 10 million as a cost, a liability. Netflix uses it as a projected asset, what it's worth based on views.
Yeah.
And so, the analyst community has been okay with this for all these years.
Yeah, because
I've never heard anyone, talk about that when they bring up Netflix or compare it to Disney. So it's interesting. A lot of accounting tricks.
Well, the thing is, Dale, that, most of the analysts today on the sell side, not all of them, obviously, but, many of the job's been really juniorized. and they don't have time to think.
Yeah.
I've spent a lot of time looking at Netflix and a lot of time thinking about it. And, I've said, well, look, this content thing, I mean, irrespective of whether you agree with their policy or not, the way the policy is executed means that you can't look at the valuation on an EV/EBITDA basis. It'd be like looking at the valuation of a restaurant, but not including the cost of the food. So it's a bit daft to do that. So what you've got to do with Netflix is you've got to look at the EV to sales. And EV to sales is my favorite measure, not just because it helps you looking at loss-making companies, but because sales are a much more stable number than earnings. So it's just easier to look at a number which is not moving around as much, because it means that if you've got a cyclical business, you can understand the range that the market likes to apply to the valuation. And you can see that in the case of Netflix, it's traded below 2 times for a very short period. But for the last several years, it's been trading at between 6 and 10 times. At a brief period above 10 times. If a stock's trading in more than 10 times sales, I get a bit nervous about it. But you can see it's traded right back to 3 times sales. And people are now saying, well, this must be really cheap. And this is on the forward EV to sales. Now, if you're looking at EV to sales, there are 2 things you need to consider. One is the sales growth, and the other is the margins. Now, if you look at Netflix's sales growth, obviously, COVID was hugely beneficial, but it brought a lot of sales forward. It didn't create new viewers. It accelerated the time that people would turn to Netflix. And I've been bearish on it for some time. And that makes it very difficult for me to turn around and be more positive. I don't know if you ever have done a stop and reverse, Dale, but for me, the stop and reverse is the most difficult thing for a trader to do. It's almost always the right thing to do. But when I was in hedge funds, if I was long on something and I decided to close the long, I would very, very rarely go short, because I think it's incredibly difficult to stop and reverse, as this Porsche driver in the video is finding.
Yeah. He needs one of those automatic parkers.
Yeah.
He doesn't deserve a car like that if he can't parallel park.
Well, exactly.
Who is that guy?
This is actually the video from the Porsche advert. I think I need to let it finish before I can go on. It's quite a funny thing. But,
okay.
I just wanted to point out that for me, this is quite a difficult thing. And
it's really not that difficult. All you have to do is double or use some type of multiple for your long on your sell stop to reverse. But you're saying psychologically people have a hard time absorbing a loss and assuming risk simultaneously.
Well, no, it's not even that. I mean, I just think, you might have had a successful long play out. You think it's got an unreasonable valuation, and you close your long, and it's just psychologically difficult to go short. And in the same way, I just want to caution that, I might be still too bearish on Netflix, because I've got that negative mindset in my head, and it's just very difficult for me to turn around and reverse. But what I just wanted to say is, look, if you look at Netflix, you've got to think about 2 things. You've got to think about the sales growth. You've got to think about the margins. And how much can Netflix grow its revenue? Well, it can grow its number of customers in Asia. There's a huge number of potential customers there, but they're much, much less valuable. An Indian customer is worth 1/10 of a UK customer. Price rise.
What they pay?
well, I don't know exactly what they pay. I mean, Netflix has actually been incredibly unsuccessful in India. But the fact is that the average wage in these countries is so low that they can't afford $15 or $20 a month. I mean, they get paid $15 or $20 a week. Price rises in the West are going to help, but there's going to be some dilution. There's going to be some leakage. They're going to do this thing where they stop people sharing passwords illegally and make them pay. I think that's crazy. I think they're going to see a huge dilution in revenue as a result of that. And I think the ad-supported service will be quite good, but I don't think it will increase the revenues. I think the revenues will be very similar to the revenues that they're making out of a customer just now. So it's not impossible that they can grow, but not on the previous trajectory. And what's quite interesting is that the Netflix sales growth wasn't projected by the analysts to be particularly strong, about 10% per annum. And this is what's happened to the forecast since before COVID. This is the next 12-month forecast as we're going through time. So you'd expect it to go up. But actually, what's happened is that COVID has created a 40% hike in the base. It's actually pulled forward growth. If you look at the consensus for 2024 revenue, it's actually gone down since the pandemic. So this is the same chart since before the pandemic. And you can see that even before the Q4 21 and Q1 22 forecast downgrades, the revenue forecast hadn't gone up, right? So, I think that's a very telling thing. COVID didn't give it the massive boost that people thought. It was a bringing forward. And the second question is the margin. And this is the consensus margins for Netflix. So going from around 20% up to 25%. I think that's probably closer to 20% now. But this assumes that Netflix accounting policies are accurate. Now, if you put Netflix on my accounting policies, its margins are less than 5%. And I can promise you this, that I am right and Netflix is wrong, because at some point, the amortization of content, which is currently running $5 to $10 billion behind the spend on content, eventually the amortization will equal the spend. It's just a mathematical fact. When Netflix stops growing, when it stops increasing its expenditure on content, the amortization and the spend will be equivalent. And that means that the margins are going to go down. So
you're still bearish. Where do you short Netflix?
Well, what I was
just short it?
Bill Ackman, I think he lost $500 million.
Right.
And, he may not have been stupid to cut, but even he couldn't stop and reverse. And I think that when it gets up to that close to that $200 mark, I would be shorting it again.
Okay. So that's a message, is just because something is cheap doesn't mean that it's a buy, and that it was once unrealistically priced, and now it's going to be realistically priced. Is that?
It would be I would just caution you in one thing. I think the next set of results will be better received, because I think that the management will have had a massive shock from both the Q4 21 and Q1 22 results, and they won't want to take any chances with the Q2 results. So I'm assuming that they'll come in with subscriber numbers which are flat or down less than 1 million or 2, and people will go, oh, it's okay, everything's okay. So I'm not sure that I would short it today. I would wait till those results are behind us.
Would Ackman have recovered his loss if he had gotten short when he liquidated?
Well, he would have. Yeah, he would have. Well, it depends when he closed it.
Yeah, I'm not sure. I think it was on that gap down day.
He closed it on the day of the figures, and the shares. Yeah. Obviously they've fallen below 180, 170.
Yeah.
So if he'd closed it then, he'd have really reduced his loss. I think you can't, if he hadn't closed on the day of the figures, then obviously the share price fall wouldn't have been as aggressive.
Right.
And, I mean, he's had a huge amount of praise for doing what he did. And, I think in a sense, he's been, what he did was very brave, but he was an idiot to buy in January, right? I mean, people say, oh, well done for cutting. But Christ, if anybody else who'd lost $500 million, people would be saying you're an idiot. You shouldn't be giving people's money to invest.
He's got a great publicist.
And I have to say, I mean, he's the most charming guy, and he is his own best publicist. He's a marketing genius, as many investors in the US are. The people in the US are no better at investing than the people in England or Scotland, but they're a hell of a lot better at marketing.
You're getting pretty good.
I'm learning. I'm hanging out with you, Dale.
I mean, you put out a pretty good commercial here for the last 25 minutes. You have really made strides in your marketing forte. So,
well, that's sweet of you to say. We haven't done the presentation before, though, you see. So
yeah, we were always just winging it.
Yeah. So now tell me, why is the dollar coming off the top? Is it just because people are getting a bit more concerned about the economy and rates aren't going to carry on going straight up?
Well, one of our experts is attributing it to month-end flows.
All right.
That happened. So kind of month-end. And it's, dollars had a nice little break. And just like you said with Netflix, there are waves. And we'll see if the dollar top is really in. What do you think? Is the dollar top in? I know you watch it.
It looks very expensive to me. I mean,
okay.
I'm coming to America in the summer on holiday with the family for the month of August.
Nice.
It'll be, I mean, America used to be cheap to visit. It'll be eye-watering. It'll be more expensive than London at $1.20.
Yes.
So, but you know what?
Where are you going?
We're starting off in New York, and then we're flying to Las Vegas.
Wow.
We're going to National Park. I think we're going to Yellowstone.
Yosemite?
I'm not sure exactly. My wife's hobby.
Yeah, you don't know. The way you know what you're doing is you ask your wife what you're doing.
Yeah, my wife's hobby is spending money. So, a holiday is a good way of doing that.
I hear she's gone professional.
Yeah.
It's not a hobby anymore.
Yeah, she's pretty good at it, I'll tell you.
Okay. Well, you better trade well this going forward. Or she'll get rid of you, man, if you're not doing 100% on your money.
Yeah, well, I'm trying. But the dollar is the key to everything, right?
It is. It's a linchpin. So what do you think?
Well, I mean, I don't.
You want to be long euro, like on a pullback to 105 or 106?
Well, I think the euro's dead. That's the trouble, because they don't have a policy. And what people I don't think have realized is that to get out of Russian gas is going to cost hundreds of billions of dollars.
Yeah.
And it's a very, very significant issue for the German economy, because the German economy is a manufacturing economy and it needs energy. So there's a huge potential increase in oil and gas. That's where I think the opportunity lies.
Okay, so is that your highest conviction trade? It's still long energy?
Yeah, I think so.
Okay, long energy is still your highest conviction trade. Feeling the metals at all?
I mean, I'm puzzled as to why gold hasn't done better. Well, I mean, do you know? I mean, gold should be at least 10% higher than it is now, shouldn't it?
Needs a bear market to give it some jet fuel.
Well,
in the dollar, not stocks.
All right, yeah. Well, okay. I suppose part of it is the dollar.
Yeah, and yields. Part of it's yields, which is why the dollar has been strong. The yield differential, I think that could might be mispriced into the dollar. We'll find out into the QT, etc. But I appreciate the presentation in Netflix. So sell rallies in Netflix, like the recent rally we had last week. So okay, so still bearish the market. Could S&Ps trade 3,000?
Well, I mean, I think the S&P could fall quite a long way. And, at some point, people are going to say, well, what are we going to put our money in apart from equities? And I find that a very difficult decision. But what I'm doing is, if you look back to the 1970s, what worked was small cap value. And I've never invested in small caps. And for the first time in my investing history, I'm buying small caps. And
the Russell, when the market was making new lows last week, the Russell did not. Yeah. So, okay, you like the small cap.
And there's some extraordinarily cheap stocks. If you fish around in these sort of murky waters, stocks that people haven't heard of, that you just think. So, I mean, we're looking at a stock in the UK where we think the property is worth the market cap. Okay. So, and it's not a property company; it's an industrial company, but it's sitting on some property assets, and those are the sorts of things that I'm looking for. I think I'm looking for stuff where I can't see a huge amount of downside in that company. And if they get their act together, there could be quite a lot of upside. You're seeing price earnings ratios of 10 and, some single digit.
Yeah. Well, the pleasure talking to you, Stephen.
Always my pleasure, Dale. Thank you so much for having me.
And why don't you show your contact page again for people to take a screenshot and, check out your work and maybe a course. So there it is, behindthebalancesheet.com for Steve. And there he is on Twitter and YouTube's. And yes, I'm willing to be interviewed by you on your YouTube channel.
All right, cool. Well, that might be quite fun. I've just got one going up in half an hour. I've interviewed a guy who's written a book about the banks in Iceland and the massive fraud. It was the largest fraud in history relative to the size of the economy.
Yeah.
And he's written this book called Iceland Secret, and he worked for the regulator and investigated the big three banks' fraud. And more people went to jail in Iceland than in America. Can you imagine?
Can you imagine how cold it would be in a prison made out of ice?
I'll tell you what, there's 500,000 people in Iceland. And more people went to jail because of the global financial crisis and fraud than did in the United States. There's something fundamentally wrong with that, right?
Yeah. There's a lot of broken parts across the board everywhere, aren't there, Stephen?
Yeah, well, that book is really interesting, and people, if you want to hear a really interesting story, go to that YouTube channel at I don't know what time it is there. It's 2:00 today here. So
6 a.m. on the west, 9 a.m. New York time, right?
Oh, it's 9 a.m. Okay, yeah. So of course it'll be 9:30, 10 o'clock. It will be up. All
right, Steve. Well, I'll get a hold of you on Twitter, and we'll set up another day.
Magic.
Every quarter, the picture seems to be getting darker. So maybe this fall we'll see the light.
Well, I don't know, but we'll fingers crossed. Thanks for having me. Take care.
All right, Stephen. Great having you. Everyone, Stephen Clapham, and check out his work. I give Stephen a hard time, but he's great.
Take care.
Okay, thank you, Stephen. And everyone, have a great day. The team will be there for the morning edge in 11 minutes. And don't just count your pips, count your blessings. You're welcome, AJ, Richard. Everyone, have a great trading day. Adios.